And in fact, let's talk stock specific. And the stock, we're in conversation with the management of Talwalkars, in fact, India's biggest fitness chain, signing a deal with Zorba and will acquire 50% stake in its yoga studio business. Anant Gawande of Talwalkar joining us on that. Anant, we've been speaking about, of course, Zorba previously, and now plans to take it to a new city. Run us through the investment as well as the business plans there.
Yeah, thank you so much. This is in continuation of all the new partnerships which we are entering into. One of them was with the Sri Lankan gym chain Power World Gym, where we opened 10 gyms about 3 weeks back. We also acquired around the same time Zorba, the yoga chain in Chennai. We started yesterday 4 yoga centers. We plan to open between 20 and 25 in the next 2 to 3 weeks, probably by 31st or around 31st. The total investment in the venture may not be very much because Zorba the Yoga is a zero-debt company with exceedingly high profit margins because Yoga does a very good ROC. These will either be within our outlets, within our gyms, or separately on a standalone basis. Presently, our focus is Chennai, Bangalore, but we'll quickly move into Hyderabad, Mumbai and Pune over the next 2 to 3 weeks.
What is the expected ROI as far as the entire Zorba business goes?
Yeah, I mean, we believe that the ROC or ROI, whatever you call it, whichever way you look at it, should be in the range of between 30 and 35%. As I said, this is exceedingly high profit, high return business. We are actually curtailing the ROC slightly, saying that we will spend money on advertising and promotion of brand across cities which we launch it into.
Okay, we have of course been in conversation with you several times over the past few months. You've been on an acquisition spree, adding different offerings to your portfolio. Just give us a sense of what the overall plan is. What's the plan of integration? Are you going to look at combining all of them under one brand or under one roof? Or will you continue maintaining it as separate brands? And how should investors really look at it in terms of the blended margins trajectory perspective?
Our own feeling is that the blended margin next year will go up. Thanks to that our companies like Power World, Zorba, which are all ROC accretive to our main company. But because their base is small, it will not be a quick process. As far as integration goes, we are already doing it. Because if you realize, Zorba is starting either within gyms or outside. The same thing will happen with GymTracker, which is an online portal. And we plan to retain the brand because these are unique brands which are in their own identity space.
Okay, let's talk about the Q-on-Q business as well as, the seasonality of the business. Q4, of course, is a stronger quarter for you. When we spoke to you in December, you said that that quarter is a weak quarter for you. Are you seeing signs of improvement then in Q4?
I had already mentioned earlier on your channel that January was a great month. March has been right now on par, and we believe that will continue happening. I do believe that this quarter, which is the fourth quarter, which generally is a strong quarter for us, will continue to be a strong quarter.
Anant, what's been the total number of stores that you've opened? We are, of course, at the beginning of the new fiscal. So can you give us a sense of how many have been opened and how many you plan to open?
This year, as I said, a combination of Zorba, Power World, our own gym franchise, JV. I think at the end of the year, we would have opened about 30-35 outlets. Okay, maybe a little more. On the other hand, next year we believe that through a combination of all this, we should be in the same position of about 30-35 outlets. So we think that we should be able to close this year at about 175-180 outlets, and next year at about 205-210 outlets of all kinds.
Speaking of FY17, what's the kind of growth you're expecting in revenue and also your earnings growth trajectory?
At bottom line, we have been consistently growing at about 20%, if more. 9 monthly, we have grown at about 23 to 24%. We always say that growing in a steady state economy at more than 20%, we should be able to do because there is a same-store sales growth as well as new expansion, a combination of which should give us a 20% or higher.
Thanks very much for speaking with us, Anant. That's Talwalkars for you, and it is now attempting a bit of a pullback, 0.1% higher on that stock in a market that's been absolutely muted. Just HCL Tech, can you pull up that stock? They have just informed the exchanges they're going to change their reporting year to the current fiscal that most of the companies follow.